Welcome to the presentation of the answer of your week number 2 activity, the determination of unknown accounting elements and the determination of profit and loss. But before we are going to proceed to the answer itself, let us have this brief discussion regarding the accounting elements of the financial statements. We have five here: the assets, liabilities, owner's equity or known as the capital, income or the revenues, and lastly, the expenses. The first three are the elements that are directly related to the measurement of financial condition of a certain company. The financial statement that shows those elements is called the balance sheet or the statement of financial position as of the end of the accounting period. While these two, revenue and expenses, are the elements that are directly related to the measurement of performance of the organization for a given period. And a financial statement that has these two components or elements is called the income statement. And we can have in the bottom either profit or loss. Okay, let us have an acronym that will going to represent our accounting equation. We have the ALU. A stands for assets, L for liabilities, and OE for owner's equity. Please note that at all times, the total assets must equal to the total liabilities plus owner's equity as expressed in the basic accounting equation. Now let's proceed to your problem. Here, we have five cases showing our basic accounting equation in the top. We have assets, liabilities, and owner's equity column. For case number 1, we have total assets of 380,000, also total liabilities of 110,000, and the missing figure is the owner's equity. How much would be our OE? How we're going to compute that one? It's just like this way. 380 less 110, we can have owner's equity of 270,000. To check our equation, 110 plus 270 is equal to 380. Okay? How about case number 2? The missing figure is the assets. So therefore, 220 plus 370, that will give us 590,000. How about case number 3? Can you do it alone? What would be your answer? The answer you must have is 130,000. To check our equation, 130 plus 120, the total is 250. So it is balanced. For case number 4, what would be our answer? The answer is 530. And for case number 5, can you guess the correct answer? Yes, you're right. The answer is 165,000. To check that one, 165 plus 150 equals 315. Now let's proceed to the next problem. The determination of profit and loss. We have three cases here. We have total income, expenses, and in the bottom, determination of profit and loss. Okay, how we can determine that we have a profit? We can have a profit if our total income is greater than our total expenses. Let us take this case number 1. Total income is 350 less total expenses of 210. Therefore, we have a profit of 140,000. Case number 2, income is given, expenses is unknown, but loss is given 110,000. Therefore, we can expect that total expenses is greater than the total income. How to solve that one? So 290 plus 100, we can have 390. To check that one, 290 less 390, we have negative 100, which represents our loss. Why loss? Because total expenses is greater than our total income. So I just reiterated it. Now let's proceed to the last case, case number 3. Total income is 100 versus expenses are 105. Definitely we have a loss of 5,000. Now let's proceed to the additional problem. Here, we have here the problem. Anivine has put up cash in the amount of 150, representing her initial investment. Out of 150,000 cash, she acquired an equipment costing 100,000. So she bought an equipment, in other words, which required a down payment of 80,000 and incurs a balance or a liability of 20,000. The question is, how much is the owner's equity at the end of the year? To answer that one, let us have this presentation. Showing our basic accounting equation, A is equal to L plus OE. Now let us take the first transaction or event that happened in our problem. It is the initial investment of Anivine by 150,000. So therefore, there is an increase in our assets by 150, representing our cash, and in the other side, zero liability and increase of our owner's equity by 150,000. To check our equation, it is balanced, both 150,000. Now let's proceed to the next scenario, wherein Anivine acquired an equipment. How much? 100,000, and it had a down payment of 80,000. So the scenario would be like this one. So equipment of 100 less the down payment. The question would be, what will happen to this side? What is the effect to the other accounting element? Is there any effect to the liability? Did you answer right? Yes? You're correct. Yes, there is an increase in the liability column by how much? That is 20,000, the balance. So that's it. How about our owner's equity? The answer is no effect. So 0. Now let us check our equation based in this transaction. 100 minus 80, we get a positive balance of 20, which is equal to this side, 20. To check the balances, we have 170. How we get that one? 150 less 80 plus 100, we have 170. For our liabilities, 20, and for owner's equity, 150. So to check our equation, 20 plus 150, that is 170. So again, it is balanced. Again, always note that always the total assets must equal to the total liabilities and owner's equity. Now let's go back to the question of our problem. How much is the owner's equity at the end of the year? The answer is 150,000. I hope you learned somehow in my presentation. Thank you so much for listening and watching. See you in my next tutorial video.